PPP loan, EIDL loan, both gone. You have the restaurant revitalization fund that's been put into effect for those applicants. However, you're limited if you're not a restaurant business owner, you can't qualify for that. How about the employee retention tax credit, up to $26,000 per employee in a refundable payroll tax credit you don't have to give back. That is very lucrative right now, and it's only available for a limited time. That's something to jump on before you miss out, before you sit on that couch and you're wondering, what if I regretted doing this, where I was waiting and waiting and waiting. You don't want to put yourself in that position. So that's another program that I would take advantage of for having W-2 employees. And I'll leave more information of that one down below in the description. Please check it out to see if you can qualify for it. And there will be other alternatives for you there as well. If I haven't introduced myself, which I believe I haven't, my name is Michael with Viral Funding Solutions. I'm a business loan broker expert who's been able to help business owners of all magnitudes, backgrounds, industries, those who cannot qualify at a bank, or those who can but prefer an alternative, those who can't qualify and come to an alternative. And so I've been doing this for a long time, and I've been in a position like yourself, looking for funding a long time ago and trying to find out the ins and outs. Who can I trust, rely upon, going through the wrong avenues and routes, being very careful, understanding that you may be getting a lot of email after emails, texts, phone calls of people you're unsure about. Who are they? How did they get my information? I've been there. Be very careful about who you say yes to, who you respond to. And even on another matter, they may not even care about you on a personal human level like I do. And I don't just say that. I really do take the time and then understand you and your business and what we can do better on both sides of the equation. So what are other alternatives? Because the PPP, boom, EIDL, gone. You have the Restaurant Revitalization Fund and a few of those micro SBA programs, in which I want to jump into now. Well, you have the SBA 7A up to 5 million, the SBA 504 up to 10 million, and a lot of the times it's up to 5 million. It could be up to 22 million. There's just some contingencies we have to look at and how you're using it and the amount. Praise that and a few other things. But the SBA 7A, you have it, you can use it for expansion, growth, refinancing, consolidating debt, equipment, purchasing an existing business. There's flexibility there. You don't want to use this for a real estate investment, apartment complexes, single family homes, multifamily, these things where it's uncertain at times, the market and the return and how you're taking money out and putting it back in, and it goes over and over, whether you're holding on to it, selling it. There are a lot of factors and different properties that we look at, but you have that up to 5 million. I don't want to go too in depth with the qualifications. I have video content I'll leave you to down below on the SBA 7A. And there's a Hybridge SBA 7A product with about 90% of an approval process. Nothing else out there like this. And where you can get bridge funding, meaning, here's another alternative. You can get an unsecured term loan, that meaning it's non-collateralized. You don't have to put any collateral like you go to a bank, right? And what we can do is get you between 1 to 2, if not 1 to 5 years. Normally it's 1 to 2, 1 to 3 years in this market, you see, because it's become a lot harder. And so you see that, that's still okay. And we can get you that on top of perhaps a line of credit or separately. And there's also a merchant cash advance that's based on future receivables. And I'm not going to go into specifics about each and every one of these. I'll leave content for them down below, but fill out that questionnaire form to get in touch if you haven't. And so you can get that funding first. In the meantime, getting you approved for an SBA, looking to get you approved. Well, you say, okay, I get approved for, I wanted 100 to 200,000. You probably won't get that in a lot of cases. Maybe you do because you have it. A lot of people overshoot how much they can actually get that's non-collateralized. If it's collateralized, we can have a different setup and speak about what kind of assets you have. We can get you equivalent to that. And I'll leave more content on that below, but fill out the form again. And so you get 50,000 to start off with in an unsecured term loan, and then maybe we paired up a line of credit of 25,000. So there you go, 75,000. Can you put that to work in the meantime, however much time you needed? You go, yeah, I needed the money in the next 2 weeks. I couldn't wait for the SBA yet, but I'll take this, or I'll take one or the other, or if I only got approved for one, whatever that is, the cash advance, etc., line of credit, term loan. Well, I can take that and then say, well, I'll wait. I got approved over here for the SBA for about 120, 150,000, whatever it is. So let's look at consolidating, perhaps, if that's the case. And we can do that in a lot of situations. We can get creative. So you have to think about these different ways. Even if you're waiting for an SBA, we look at it and go, oh, well, there's personal loan options, there's startup loan options, there's equipment financing separately. You can get a lump sum towards the equipment, or you can do traditional equipment financing / leasing EFAs to own, EFA lease to own, etc. Whatever you're doing, if you're renting vehicle, it's getting too expensive, you want to own the vehicle outright. We can do write-offs for depreciation within the first year or so. There's a lot of tax benefits perhaps to that, but without going too far into that world, just know that there are all these alternatives. Your personal loans, startup loans, you have 0% interest for 6 to 18 months, up to 150, if not 250,000 with corporate credit. And you're looking at business credit cards and you're stacking them together and getting multiple amounts that you can use towards purchases of products and supplies, and start building your vendor credit at the same time, establishing that business credit. So when you come to get an SBA loan, you're ready. And 0% for 6 to 18 months. And thereafter, I mean, you have to know good debt versus bad debt, of course. But if you're that individual who's too worried about taking a chance on what you may get approved for, it's because the benefit does not exceed your repayment. And you can't take that 10,000 and turn it into 15 or 20,000. You may go backwards. You may be not making enough per day to even think that. It's coming out of your own revenue instead of the revenue you're making from the money you're putting to use. And that's a different factor. And we never give you something that you can't handle, but you just have to understand your plan. You have to step back and go, like that example, if you didn't get 100, but you only got 50,000, could you put it into use? Could you go back and revise your plan and say, well, I got to trim a few things here. When I get the rest of it, I'll then use it for that. That's how a savvy business owner thinks, whether you're going through the bank or not, which I've created content on alternative banking options similar to this. But that's what you have to know. And there's so much more I can go into detail. But just to recap this video, PPP loan gone, EIDL loans, restaurant revitalization fund. How long will that last? We've seen that before until they shut down the next amount of applicants and then they have them on hold. Then we have the SBA Microloan up to 50,000, the SBA Community Advantage. Those are a bit harder, but they're there. The 8A mentoring program, grant opportunities, personal / startup loans, but that would require you to have stronger personal credit. And that's what it takes. Like if it takes you to get a personal loan, you have to build your personal credit, and at the same time you build your business credit to get access to vendor credit and to get access to better business credit cards on the back end. Like you got to do that. And everybody's looking for something really that doesn't exist. You might go into your 401k, IRA financing, stocks and bonds, mutual funds. Do you have enough assets? Is it valued at enough for us to look at it? Is it in the market for us to look at? Will a lender take a chance on that? It's not always the case because you have a lot, your CD account and all of this stuff. So be certain about your cash flow, understand what you're leveraging, what you're over leveraged on, but be very careful about who you talk to. Speak to somebody like myself who's been doing this for quite some time, helping out business owners of all industries. I know the problems, I know the pain points, I know the questions, I know the roadblocks, I know the results. And I'm going to show you how to do this longer term. Whether you start something and it only helps you short term, but that's where you have to begin. Or does it help you short and or long term right now? But we have to build. And there are a lot of different ways: venture capitalists, angel investors, crowdfunding, equity investing, home equity, line of credit. There's so many things to do that I haven't even touched upon, but it just depends on every service, how we look at it. So that will be everything for me in this video. I know it wasn't a huge update on like PPP EIDL, Restaurant Revitalization Fund. Just know that that's out there. I've been making content on this in the past that I'll leave you to down below. But also that questionnaire form to get in touch. Please fill out the questionnaire and I'll give you a very personalized and customized email response on your best funding option and options, whether you can qualify for them or not. I analyze this, I evaluate it. And again, I have a systematic, mathematical mind. And so I'm very precise about the things that I like to do. I'm very punctual, energy, time efficient, disciplined. And I'm not asking you to be exactly like I am, but just be respectful, accountable, show up, allow feedback, don't become impatient, and have an open mind. At the end of the day, that's what you need. If you're not doing that, then you're going to run into a lot of troubles. People contacting you over and over, thinking it's me who sent you to different parties that way, and I didn't do that. We protected your privacy. It's safe and secure with me. Maybe they got it from the credit bureaus because they see your information stored from applying, and they have organizations out there. I don't do this. I don't associate with them, but they'll buy that and they'll contact you, act on a different party, act on the same party. I'm like, that's not coming from me. Or it's syndication leads, and there's much more. You have to be very careful about the scammers as well. And I'm going to keep you safe in the best position to advance. But if you don't, take that ultimate action from what's shown and you're just out there trying to find the lowest price, a commodity, you're looking for the wrong thing. It's not about the interest at the end of the day. It's trying to get a longer term and a better repayment to begin with. And if you can't get one or the other, if you can't get the term, okay, but the repayment, okay, looks fine enough, or all right, we start there and then we build up. If the benefit exceeds the repayment, you're going to double, triple, quadruple your ROI with you taking this money. It's not just going to set you back, or it's going to keep you even. It's going to help you save more money. Depends on the situation you're taking the financing for. And for all other things like commercial real estate, any other kind of real estate financing I do as well, I'll link you guys to down below for those forms. But the questionnaire form will be there. That is everything from me. Appreciate you. Thank you for tuning in. Oh, one last thing. Employee retention tax credit. Make sure you check that out down below. I'll walk you through it. I'll even have a separate video for it that you can go through and learn more about how that works. And if anything else comes up in the future, anything new you need to know about, I will keep you most up to date. But that is a very popular program right now, as well as the 0% for 6 to 18 months, which a lot of business owners are really realizing that they took too much time off before, and they need to start taking advantage of this before, the next year and even the next year after that, as interest rates keep increasing and you're in a marketplace where it's becoming a lot harder for a lender to want to lend you a lot, even the banks, and withdrawing money and not giving you perhaps the best rates to begin with. And it just happens that way. And got to understand, you got to start somewhere, and you got to build that relationship up with myself, the underwriters, and the lenders in my team. So that is everything from me. Look down below in the description for all information. If you like this video, yes, please give it a thumbs up. Would greatly appreciate you. If you haven't subscribed, please go ahead and do so. Click that bell notification icon so you do not miss any future videos I will be coming out with. And that is it for now. Talk soon. Bye.